Okay, hi traders. Here's a new video from me. Today the markets are closed and the only thing that they offer us is a 30% crypto fund with expiry time above 1 minute, and I trade only 1 minute. So I will not take a trade today. But the risk warning, your invested capital may be at risk, and this video is not an investment advice. I take it the same because at the end it's a habit already. Okay, so I use this time this weekend to explain you some more about the Bollinger Band in this video, because the Bollinger Band is a really cool tool, a really cool indicator, which has much more to give than almost the people know. Not everyone knows what is the Bollinger Band able to tell you about the market and everything, and so I would like to make this video to show you what I get information out of the Bollinger Band. Okay, today the expiry times are above 1 minute, and so I will not take a trade. I will only explain you how the Bollinger Band works and what it's important to know about the Bollinger Band. Okay, I have touched already the last time I touched already some information about this, but this time we will get something deeper. Okay. For this, I can use this crypto fund to explain this. Okay, like you see, the Bollinger Band price reverses often, yes, on this upper and below Bollinger bands. That is already known. This knows everybody. But what often some guys didn't know is that it is completely useless to use Bollinger Band, yes, in combination with RSI. I don't know why why some trader do this, but to be honest, I can show you in a simple way that you don't need any RSI when you use the Bollinger Band, because the Bollinger Band shows you oversold and overbought areas. For example, this is a overbought area. Yes, this here is an oversold area. Okay. For example, here above you have again an overbought area, and where I don't know this is an oversold area. Yes, this is also overbought area, and where do I know? Because if the price is outside the upper or the lower Bollinger Band, it is a oversold or oversold or overbought area. That's so easy. So if you use the indicator, yes, there's E indicator in combination with Bollinger Band, you see on both indicators the same stuff, and this is not a confirmation of any trade. This is only believing in something which isn't true. Okay. Okay. I show you that I'm right. Yes, because so I set up the RSI. Okay, we get the standard. You get the standard stuff, yeah. And okay, now I show you the points. Here I told you this is an overbought area, and like you see, you have an overbought area. Oh, what a surprise! Here I told you we have this oversold area, yes, and what I see, oh, oversold, yes, and so it's going on all the time. Here you have oversold, yes, like you see. Here I told you we have an overbought, yes, and we have overbought, and you have here an overbought area too. So this is how I use the Bollinger Band as overbought oversold area indicator. You can to do something good, yes. You can can work with some other indicators, yes, to make it more reliable. But the RSI or also the stochastic is not really a good confirmation indicator, because at the end you see it on the Bollinger Bands that you are in oversold and overbought area, so you don't need some other stuff. Okay, so what does the Bollinger Band tell you also? Okay, the Bollinger Band tells you a lot about trend. Okay, like I told you in the last video, when the price is above the middle Bollinger Band, yes, this is the middle Bollinger Band. It don't care if it is one deviation, two deviation, it's not important. If it's above this Bollinger Band, it's starting or it is an uptrend, yes. If it's between the one deviation and two deviation, it's really an uptrend, and you see it's a strong uptrend. Okay, mirror, it is at the Bollinger Band, more the uptrend is strong, yes, and the same counts for downtrend. Mirror, it is on the downtrend in the lower Bollinger Band, so more it's a downtrend. Okay, so here we see a Bollinger squeeze, yes. After a squeeze, you should know it's coming in a breakout. So if you see a squeeze, this was a nice squeeze here, yes. If you see a squeeze, I would not take a trade, since you don't know what will happen. Okay, then you can take a trade, because this is a consolidation area here where the squeeze is, and after this will come always in breakout, up or down. You don't know. You have to look. Here you see also. Here's a little smaller squeeze, and after this it's going up. Okay, it's a breakout in this direction. Let me see, it's here another squeeze. Okay, first volatility increase. You see it in the larger, wider bands. The bands are going to be wider, so the volatility increase. Then there came a consolidation area, the squeeze, and then there will come a breakout. Okay, so you have to be careful. When you start your tradings, when you trade on 1 minute, you can use them if you see that this is coming a breakout as a trend continuation. Okay, here you can trade trend continuation, and you would do some ETMs in a row. Obviously, why I don't trade on 30%? Yesterday evening, I had nothing better to do than to script a little bit. And I have done a little program on JS Fiddle. I will show it to you. Here is a program that I have written. You can I will put this link in the description. Yes, you put here on you click here on run. Yes, and you see here a win rate. Okay, now we say I have a win rate of 60. I use 10 attempts, and we have a payout, or here a payout of 30%. Okay. First of all, then you click of submit, and what you will get is the needed win rate. You see, on 30% you need a win rate, yes, of at least 77%. Okay, to be profitable. Okay, so and this is when you have a win rate of 60%. What comes out on a random basis? Yes, this could be a day for example, today, Saturday, and this would be the net profit you will get if you trade that with 60% win rate. Okay, let's say we have it's the next day, and we have still 30%. Okay, something else. You see. And if you click often, you see there is, you will get with 60%, you get never or only a few times, since now never, yes, in profit. You are only losing. And why do I risk my money? Yes, for 30%, if I with 60% I don't get ever in profit. Yes, there must be a lucky day. A lucky or lucky 10 trades where you get in profit with 30%. If you have a win rate above, we say 77, because on 30% you need 77, yes, then you can trade, yes, because you get some profit. But this is not comparable what to invest. You invest 10 euro here, yes, and you get you risk 10 euros, and you get only net profit. This is not reliable. You can do on weekend if you don't have OTC. You can do practicing, yes, but I would never trade on 30% because market is unpredictable and you don't know what will happen. And so it's too risky. Okay, what can I tell you about else about the Bollinger Bands? I, for example, don't try. I don't don't to trade. It's in the middle of the Bollinger Bands. Yes, in the middle of the Bollinger Bands, the problem is that the price didn't know what he's doing. Yes, after an extended uptrend, touching the upper Bollinger Band, coming down, you can trade because you know it will probably continue to the lower Bollinger Band. Yes, up, touch the upper, and then it goes down to touch the other. Okay, this is okay, but if it's something like this in range and market, for example, here you don't know what is he doing. Here in this area can happen everything because there is no trend, it's ranging, and that is not a funny place to trade. Okay, but if you see good candlesticks, good rejection, obviously you can trade in this area too, but I try to avoid this area. Then what is also important about the Bollinger Bands, yes, if the price goes from the center, yes, and it starts going up, it will be you can trade all candlesticks like it would be a bullish one. Yes, here a bullish trend. When it touches the upper Bollinger Band, yes, or goes below the Bollinger Band, upper Bollinger Band, it goes over the Bollinger Band, outside the Bollinger Band, and then it starts its retracement or reversal. Yes, you can be sure that often, but not always, it goes down to the down then. Okay, also if you see here, for example, you see here so in this case they are too tiny to explain it really good, but the thing is, when it's touched, yes, it's touched and it gets a rejection, yes, because this is also a support and resistance area. You can get the information that the next candles, yes, will be going down because some force is getting on these candles to get down. It means in this area you can do better call options, yes, and in this area, when it's touched and goes below and gets rejection, you do better only put options. It's like something like trend continuation. Yes, you can do trend continuation because if it's got a rejection in this one, then the next candle is most of the time, yes, also a bullish one in this case. And here, okay, here you would lose in this case because it doesn't do the trend continuation. But in the most of the times you will win. You will win this because, but you have to check the candles. Their candlestick analysis is most important. Okay, what can I tell you about that? Also about the Bollinger Bands. I would say this were the most important things about the Bollinger Bands. Yes. Then there are some other stuff, but I will talk about them in another video. So people, if you like that, like it, subscribe, comment. I'm happy about hearing about you. I have to say thank you for your support. I love you all because you, I got in a few days already over 50 subscribers. I love you, and I will make a lot of more videos to explain you more details. And I use the weekend, I think this weekend also, to make another video about the EMAs, to clarify other things which I couldn't explain you in the last video. And I would say practice, practice, practice. Yes, you can also practice on crypto funds. There's no problem. The behavior is similar to the currency markets. The only difference is that it's almost low volume and much more unpredictable because you don't know what will happen there. Yeah? Okay, good. I would say goodbye and have a great day. Bye bye.